The mounting real estate crisis in California? Yes, one of the richest states in the US, and why its governor is suddenly in full panic mode. Stick with me because this isn't just about houses and prices. It's a major economy, policy, social issue, all rolled into one. Let's start by painting the broad canvas. California has long been known for high housing prices, competition, and affordability headaches. But right now, the state is hitting multiple pain points. A severe housing shortage. Experts estimate millions of housing units are missing statewide. Supply just isn't keeping up, from regulatory delays, zoning restrictions, and rising construction costs. The market is stuck in a rut. For example, one recent article observed California's housing market is still stuck in a rut, citing high interest rates, tariffs, and a 50-year-old property tax law weighing it down. On the other hand, the political leadership is feeling the heat. The governor and state officials are scrambling to find solutions. So logically, when supply is low and demand is high, prices shoot up, affordability plummets. But what's unique here is that the situation is changing. The market isn't just overheated, it's showing signs of stress, imbalance, and even risk. That's what I mean by crisis. Let's break down why California is facing such a deep housing and real estate crunch. A few major engines are at work. Decades of zoning laws favoring single-family homes, restrictions on density, and local resistance to new development not in my backyard, NIMBYism, have restricted new housing. A widely quoted report noted, California needs to double or even quadruple its current production rate of housing units just to bring down prices. Moreover, critics say state goals and targets are optimistic, e.g., a goal of 3.5 million new homes by 2025 was set, but delivering them proved implausible given current systems. Rising costs and interest rates, high cost of construction, fierce competition for land, and now higher mortgage interest rates are all ramping up costs for buyers and builders alike. That pushes many potential buyers out of the market, slows down transactions, and makes development less profitable. Demand pressure plus population dynamics. California remains a magnet for jobs, tech, entertainment, and so on. But with supply constrained, the tug of demand against limited housing creates a big affordability squeeze. Also, think of secondary effects. When people can't buy, rents go up, people get squeezed out, homelessness rises. Political and social ramifications. When housing costs get out of control, it's not just an economic story, it becomes a social crisis. Homelessness, displacement, inequality, generational wealth gaps. The state leadership sees all this reflected not just in headlines, but real-life political risk. So when I say crisis, it's not just high prices, it's the entire system straining. Builders can't build fast enough. Buyers are priced out. Renters bear the burden. Policymakers are under pressure. Now let's talk about the person at the center, California's Governor Gavin Newsom. He's been pushing housing reform for years. But the scale of the challenge and the visible consequences are raising the alarm. Unmet targets and mounting public pressure bar tries. Back when Newsom ran for governor, he pledged to lead the effort to build 3.5 million new homes by 2025. But late reports suggest the state is far behind that mark. With shortfall come visible signs, affordability dropping, homelessness rising, voters and media demanding action. That creates political urgency, a perfect storm of crises hitting at once. Beyond just housing, fires, climate change, insurance rates, coastal erosion, migration shifts, all of which feed into real estate instability. For example, after major fires in the Los Angeles area, some insurers pulled out of the state, driving up costs and risk. When multiple stressors hit, it magnifies the housing problem, making the standard "let's build more" response less sufficient. Legislative and regulatory moves, signals of urgency. For example, Newsom signed a major overhaul of the California Environmental Quality TUA to speed up housing development, stating, "We have too much demand, chasing too little supply." These kinds of sweeping reforms suggest that the government sees the situation as more than just business as usual. Risk of broader economic fallout. Housing is not just a personal issue. It ties into the state's economy, tax base, migration patterns. If people flee the state or middle-class families get squeezed out, the long-term economic growth could be affected. That elevates the problem from social to systemic. For a governor, that kind of risk triggers panic because many pieces are moving at once. In short, the governor is acting like he's not just firefighting, he's realizing this is a huge blaze, and the stakes are high for residents, builders, even the state's future. Let's look at how panic mode is manifesting in plain terms. Regulatory sweeps, the CEQA overhaul is a clear example, bypassing environmental review for many urban infill projects so that development can happen faster. New housing initiatives. The state launched and expanded programs to convert underutilized state land to affordable housing. Enforcement and accountability. The governor's office is pushing local governments to approve housing faster or face consequences. The state is cracking down on permit delays, zoning holdups. See Wikipedia for more context on Newsom's housing reforms. Public rhetoric. The language has moved from "we need to fix" to "we must act now." That shift usually signals urgency. Political risk mitigation. Considering Newsom's broader ambitions, e.g., national politics, allowing a major housing collapse or mass exodus from California would be a reputational disaster. So you get proactive behavior. When a public official starts saying this is too urgent to wait, it's a sign they believe the risk is real, because if things go sideways, it becomes a legacy issue, not just a policy one. Let's map out what happens if these issues aren't resolved. Some key risks. Affordability crisis deepens. More people priced out entirely, middle class squeezed. Housing becomes a speculative asset instead of a home. Migration and talent drain. High cost of living could drive people, especially younger professionals, out of state or to more affordable states. That reduces workforce, slows innovation. Market correction or crash. If enough buyers drop out, developers pull back. Interest rates remain high. A correction could occur. Not necessarily a 2008 style meltdown, but a prolonged stagnation or localized crash. Social instability, homelessness, housing displacement, neighborhood degradation, those come with high social cost and political backlash. Fiscal stress, with property tax laws and budgets tied to housing values, drops in values or stagnation reduce revenue, hitting local governments and services. Investment flight. Builders may shift to states with fewer regulatory hurdles. Capital goes where returns are higher, leaving California behind. Some developers have already signaled retreat. None of this is hypothetical. These are real potential outcomes. So the question becomes, can the system pivot fast enough, and will the government's interventions be enough? It's not all doom and gloom. There are reasons to believe a turnaround is possible, though it will require bold action and time. Some of the positive signs. Streamlined regulation. The CEQA reform is a big step. Making environmental review less of a bottleneck can help speed up housing delivery. Underutilized land conversions. Using state-owned land for housing means fewer market land cost constraints. The February 2025 expansion is an example. Focus on density and transit-oriented housing. Moving away from the single-family sprawl model means you can build more units in urban areas closer to jobs and transit. Increased public-private cooperation. Builders, municipalities, and state agencies working together could reduce cost and time. Federal and cross-state learning. California isn't alone. There are lessons from states that relaxed their zoning, built faster, reduced delays, and saw improvement. Some articles compare California's delay problem with other states. If I were to pick one big message, the solution is not just building more houses, it's building smarter, faster, and more inclusively. If California can shift from too much demand, too little supply, to supply catching up with demand in smart ways, we could see relief. Okay, you might say, I'm in India, I run websites and tech projects, maybe not dealing with Californian houses, but here's why this matters for you. Global investment flows. Real estate crises in major states like California affect international capital, migration, markets. Trends reverberate globally. Tech, workforce, and remote work. If California becomes less affordable, companies and talent will shift, creating new opportunities and threats worldwide. Web business and content. Housing and real estate are huge content themes. If you cover tech gadgets and reviews, you can expand into real estate tech, living trends, remote work shifts. Strategic understanding. Knowing how big policy and macro forces work helps you make better decisions in your business/trading investments. Storytelling and YouTube relevance. Your audience loves insightful, well-explained global stories. Taking a deep dive into this topic builds credibility and value. Let's wrap up with the key points. California's real estate market is not just expensive, it's under strain. Supply bottlenecks, regulatory hurdles, and demand pressure are colliding. The governor is acting with urgency because the situation touches economy, society, and politics. It's not just housing, it's state stability. Panic mode shows up as sweeping reforms, accelerated timelines, and public messaging that acknowledges urgency. The risks if things don't improve are serious: affordability collapse, talent drain, market correction, social dislocation. But there are solutions: faster building, smarter zoning, state land repurposing, densification, public private collaboration. And even if you're outside California, this matters globally: for tech, for remote work trends, for investment, for content. If you found this video useful, hit the like button, subscribe, and ring that bell so you don't miss our future deep dives. Drop a comment below. What do you think? Will California pull out of this housing mess, or is it heading for something deeper? Also, if you want me to cover how this crisis affects the global tech workforce, remote living trends, or real estate investment from abroad, let me know. Thanks for watching, and I'll see you in the next video.